G'day, hi, Matt Stringer here from Johnson Associates. Just thought I'd give you a quick update as to banking within COVID and how this can impact you and your businesses. Firstly, I'd just like to say that these are my views personally, not affiliated to the company in any way, just working for Johnson Associates Chartered Accountants. So I guess the important things to note so far through this COVID epidemic around business is the impetus that the government are trying to do and inject back into the economy. So they've also come up with a few different packages and ways to help that. One of them has been the Business Finance Guarantee Scheme. So there was a fund of 6.25 billion that was made available to companies to borrow off banks. So those loans were 80% backed by the government and 20% backed by the bank in question. So those banks that are involved are all 4 or 5 main trading banks: ASB, ANZ, Westpac, BNZ and Kiwibank. A few of the smaller ones are not involved in this package at this stage. So the requirements of the loan or the policies themselves have changed significantly throughout the implementation of the package. So now there is no minimum amount or turnover of the business up to 80 million. So that you would assume encompass most banks or most businesses for that bank, and it's up to 500,000, which is payable over 3 years at a very attractive interest rate of around that 2.5%. Some banks are a little bit lower than that, some banks are a little bit higher than that, and there is still some risk apportioned within that interest rate spread. I guess the other significant change in relation to the banking scheme is not all facilities within that bank now have to be utilised, which is an important thing to note. So historically, when they first implemented this scheme, you had to have all of your facilities either used or being used within COVID or forecasted being used. So again, that's a pretty big change that the government made. And the other significant change they've made is the implementation of farmers and that sector going forward. So they were excluded, but now they are included. There are still property developers and spec developers and some other kind of recreational cannabis markets that are still excluded. We also can't use those funds to pay dividends or to refinance any debt that had been accrued before the 16th of March of 2020. So again, there's just some key points there. The reason that the government have tried to do this, as I said, is to inject into the economy. But the other significant point to note is that there will be some forecasting needed. Forecasting is critical for any business, and that's something that we can help you with here at Johnson & Associates. The forecast will be needed to apply for any lending that the banks will assess. So the banks will assess it on behalf of the government, and that is one of the requirements to note. The other important requirement to note is that any business that was potentially failing pre-COVID may not be eligible for the grant. You have to understand the reason for the forecast, which is going to help planning and going forward, is to ensure that the cash remains within the business and that the company can afford to pay back the loan that they have in place. The other significant thing that the government has done in conjunction with the Reserve Bank, which again is significant, is the removal of the LBR restrictions for 12 months. This is significant for the following reasons, because banks have been quite agreeable with interest-only periods of up to 6 to 12 months, loan holidays for businesses that are struggling with cash. So if you have a loan holiday, that would mean that you are no longer paying principal or interest on that loan for that period of time, anywhere between 3 to 6 months. That clearly then means that your loan will be getting bigger on a daily basis because you're not paying any capital back, and your interest is accruing to that. So that will potentially take you above 80% restrictions within your LBR cap. So by removing that restriction, it will mean that more banks will be able to do that for customers that potentially are closer to that line than others, and also potentially allow first home buyers or second home buyers to upgrade their property without those restrictions being in place. So that is a key point to note, and something that is significant. That is only available for 12 months. So after 12 months, you would assume that it may revert back to where they were historically. The other insignificant update that the government have made in conjunction with the IRD is an interest-free loan of up to 100,000 for small to medium-sized businesses. Again, we need to ensure there has been a significant impact from COVID, but it's a great source of funding, and it's going to be a quick and easy way to get rather than going to a bank for funding. So you're initially allowed up to 10,000 as a grant for a sole trader, extending to 1,800 per full-time employee, up to 100,000. So the key points to note from this is it's a 10,000 and 1,800 per employee, plus interest-free if you pay it back within the first 12 months. There's no payments within the first 2 years, and then you can pay it over the next 3 years. So 3 years, 3, 4, and 5 at an interest rate of 3%. So this is real cheap money, and it's a real quick way to go and get some short-term cash flow for your business to help try and kickstart bills and pay your creditors, which is important to keep the cash and the confidence flowing within the market. So yeah, that's just a quick update. That's where we're at with some banking side of things. Clearly, we here at Johnson's are open for business. We are here to help you with your tax queries, your banking structures, your end of year finance, and of course any questions that you may have resulting to COVID. But should you have any questions, don't hesitate to call me or the team here at Johnson's. Cheers.